The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. What just happened? I get this screen out of there. Sorry about that. We get the Dow Industrials right now down 706. You get the Nasdaq off 241. S&P's off 82. Gold contract up $16.70, $16.85 an ounce. We get silver at $17.32. Light sweet crude, they're taking that to the cleaners. Down 277, 43.13 in notes and bonds. They get the 10-year note up a full point plus 9 ticks, 138.01. 30-year off. 30 years up 6 ticks. No, 6 points. Never mind ticks. At 181.01. King dollar's down over 1,000 ticks at 95.751. The euro is at 113. The yen is at 105. And the pound is at 130 to 1 U.S. dollar. And Tom O'Brien, we get the 10-year yield at 0.69.
You know, I found myself yesterday a lot stuttering on my words because I would get something out and I would say 0.9. I couldn't, it wasn't registering. Just like you, there are 1,000 ticks, right? 0.0, see, even right there, not 0.0, 0.69%. I mean, just crazy numbers, man, everywhere.
It's a monster, folks, okay? The bottom line is that, you know, we're talking about that ABC structure down, and we talked about a straight line move. This is about as straight as you can get. You know, it is what it is. Now, the S&P, you know, and this is, I actually thrive in markets like this, folks, okay? So let's go look at this S&P. Well, first I want to look at Google because I want to show you something with Google. If you're looking that whether it's going to be a bounce here, Google's the one to watch, and this is why. What happened is that Google yesterday, okay, was coming down with way too much volume. We come down with 2.5 million shares. Now, the indices did not come down with volume, folks, okay? There was a huge contraction. So Google, the high volume low from Monday is 1271. Now, Google opened today at 1277, traded to 1261. What you want, if I'm correct on this bounce, meaning that will come in today, not over the weekend, okay?
Okay.
Is that Google, if it gets above 1271, that's the number to watch for, okay? Because that is really unusual that the NDX 100 didn't have a contraction, the composite didn't, and Google did. You see what I'm saying? So it's showing that Google is the weaker, but the fact of the matter is it looks to me like it's going to reject that low out here today. And if we have it, if I go over to the S&P for a second, show you the S&P, what happened with the SPY yesterday, folks, was this. So if we go back to Wednesday first. So we go back to Wednesday, we went higher with 176 million shares, the huge contraction of volume. That's like, see you later, okay? It was going on to 284 million. So you get the pullback, but now watch the pullback. The pullback came on 186 million shares. Well, you're going into 284 million, and the low is 385. That's a monster contraction. So what I'm looking for out here today is actually a rejection of lower price out here, and, you know, we'll see whether we can get it. I don't expect we'll go green, but I expect maybe the S&Ps will be down 40 points or something. So we'll see how this shakes out. It's going to –
yeah.
And – what you do?
Go ahead,
sorry.
I was just going to say the chart of the S&P, man, 1% moves are so nothing in this market that they're almost like forgotten. But even since 8:30, right, just since that jobs number, you had the S&Ps at 2943.
Yep.
By 9:15, you were at 2906. That's more than a percent move. From 9:15 back up to 9:35, you're sitting at 29.44. Again, about a 1% move. Yeah. We trade down at 9:50 to a low of 29.11. So you go from 29.44 to 29.11. That's 33 points. That's 1% down as well. And then from 9:50, now it's only 10:10. That's 20 minutes ago. These are 5-minute bars we're looking at.
Right.
You go from 29.11. You again go up 1% almost, basically, because 29 points is 1% right now in this S&P.
Right.
You trade all the way up to 29.40, and then from 29.40, we just traded down 18 points. The number of 1% moves as this market tries to find its price, man. It's just you can't overstate the volatility. It's mind blowing.
There's no doubt, man. It's pretty wild.
And like I heard you talking about even yesterday saying if you're bullish or bearish, you could make money in this market. And there you see it, folks. I mean, you give yourself a stop. You look for a 1% move in the indices, and you're getting it within the span of 15 minutes. Either way, you miss it. Well, wait another hour. You might get it again.
Right. There's no doubt. Now let me show you something in the gold market, folks. And this is one of the reasons that I'm thinking that the market's going to bounce so dramatically. Gold wants higher price. All the gold equities want higher price. So I just want to say that first. But what does happen is this. See, you have the dollar down basically over 1,000 ticks. Gold's up 16.90. But watch this. If we go take a look at Royal Gold, RGLD, okay, they're selling this off. So it looks to me like, you're down $3.29, okay? You didn't have enough volume up yesterday, so they're going to sell that baby off. Let's go to an Eco Eagle and take a look at an Eco Eagle. That is down like 79 cents. So to me, that's the beginning of a reversal, basically. You know what I'm saying? That it doesn't make much sense that they're selling those off as the dollar's down, but this is just kind of what happens at fast markets and markets that are trying to find out what price should we be trading at.
And they're so clueless, and that's the thing that's so wild in terms of where that should be, man. I said in the morning market report I wrote this morning, just from the high we had to back this up Wednesday night after the close, when it looked like all was restored, right? So not even talking about the high Tuesday, which was 31.37. We got that charge higher in the markets on Wednesday. You could call it as in it had to do with the Super Tuesday run of Biden, right? We make a high right at the close of 31.27. Well, you got down 6.5% this morning and you're talking about 36 hours, man. You're talking about Wednesday night to Friday morning. The markets just gave back 6.5% in a heartbeat.
Oh my God. Something else.
What's a VIX supposed to be if you're getting 6% moves every 1 out of 3 days, man?
Totally. And the VIX right now is running at 49.64.
Yeah.
So that last high actually got higher than the high. 49.48 was the high. We hit 50.06 today.
I mean, we were having the conversation yesterday with Kevin Hinks. I was on with him to start the program, right? And we were talking about the VIX, man, making note of the fact that, Tuesday's move, Wednesday's move in the market, and then you only have the VIX sitting at 36. Well, a VIX at 32 is saying a 2% move every 1 out of 3 days in the market. And we were saying, man, it feels like the VIX should be higher with this market. And sure enough, we make a new high above Friday's high, 50.06 on the open this morning.
Yeah, big number. Let's take a look at some of the higher volume equities out here in this marketplace. Okay, we have, that's not do the S&P. So you get, let's see, Bank of America's down $1.10. You got Microsoft down $6. Exxon's down $2.53. The oil, man. Oil is something else. Exxon's been pushing it the whole time, but big number, man. Occidental Petroleum, look at that, down $3.37. J.P. Morgan Chase, oh, that's a shame. Jamie Dimon, thank God he's alive, man. Yeah. He was so lucky that they caught that so quick. He was smart going to the hospital right away.
I didn't see the exact details of how it conspired. I know
what happened is that he had, he got up in the morning, and he felt some pain, and bang, he went right to the hospital. And evidently what he had is something that has to be that quick. And, he's going to
emergency heart surgery.
He should be fine, but it was that quick. So remember that, folks.
Listen to your body, right?
Yeah,
Listen to your body, for sure.
Big time. Dow down 700, NASDAQ off 229, S&P's off 80. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down to 698, Nasdaq off 215, S&P's off 78. And, you know, Seattle's dealing with some social implications out here, Tom. So this is quite an article here. So check this out. I heard that Seattle here. Let me get this. Okay, so you got a coronavirus motel igniting clash at the epicenter of the outbreak in Seattle. So what Seattle did, folks, okay, is that they bought a motel. And what they did is that they bought a motel in not the richest part of Seattle, in fact, one of the poorest parts of Seattle. And, okay, so here, what started as a bold plan to slow the spread of the coronavirus in Seattle is quickly developing into a battle. Officials of King County, Washington, the epicenter of the outbreak, said this week that they would use emergency powers to buy and renovate an lodge south of Seattle to house, check it out, to house virus patients.
Econo Lodge, right?
Econo Lodge, yeah. So what this was, folks, is that they were housing patients that a lot of these patients were homeless. So picture, you have nowhere to go. They got the virus, okay? Bottom line, they didn't talk to the mayor of Kent, Washington, right? So now you get two different things end up happening, of course. And what the folks are saying there is that, hey, you wouldn't do this in the richest part of town, right?
I didn't have to wait for that paragraph, man. You knew that's the first thing I thought of as well. Yeah. So, yeah. And
so now you have an 85-bed motel that's filled with people with the virus, right?
I would agree, man.
Oh, man.
I would agree, and that's the scary,
It's pretty intense, man. I mean, you know, there's going to be the state of Washington, man. It's amazing how it hit them, right? I mean, it's like, wow, man.
Yeah, I mean, I believe you had, was it Microsoft workers testing positive, right? The news out this morning. I believe you had Facebook as well. Getting those companies passing down the line in terms of working from home if possible. Not even if possible. I added that, working from home.
Yeah.
I think you're going to see more of that happening in the future. And I think the market's trying to price that in.
It is. It is.
Yeah.
And I guess let's go over to China for a second, because I was looking at China. China, folks, okay, well, last night, Starbucks, okay, this was encouraging. Well, here, let me bring up the Hang Seng first. Well, no, let's bring up the Hang Seng. We can bring up Shanghai, too. So if we take a look at the Hang Seng, that had a down night, but the prior day, let me look at this here, because I'll have the volumes by now, even there. Okay, so... yeah, same as us. Okay, this is pretty cool. So the Hang Seng last night. So now the Hang Seng, folks, their Monday was our Tuesday, but they had the same high volume low, 25,989. So you had 3.1 billion. Now watch, this is kind of cool, because now you're just looking for proof that there is less sellers, folks, than at the bottom. And so the Hang Seng last night, now it certainly didn't go up. We're down 621, but you can see you only did 2.6 billion. Versus the 3.1. If we go to Starbucks, SBUX, what Starbucks said last night, which I thought was really intriguing, is that they were getting back to normal. Their stores were getting back to normal in China.
Interesting.
Yeah, and what's important about this announcement, folks, is this. You got to remember something. Starbucks is a public company. They can't come out and say that their stores are getting back to normal, because it would be financial fraud if they didn't feel it was. That's what was so cool about this. Do you know what I'm saying,
right,
folks? Okay, and I think they had 4,300 stores. Let me see here. So they had closed all their stores, and I believe they got almost all of them opened again, except for 6 or something. I mean, they're saying the quarter's not going to be great. There it is, right there. So they had closed 80% of their 4,300 stores in early February. For the Lunar New Year, and okay, so now they had a number last night, but it looks like 95% of them are opened again, which is really encouraging. Okay.
Yeah, it says 95% by the end of the quarter.
Okay.
Yeah.
It's the end of March. They had a number on this last night. See if I can find it. That's encouraging, though, because so that means that the way that I would look at that, folks, is that you look at that and say, okay, this is the market-wise, we're probably looking at 2 months to 3 months. That's kind of, and you got to figure out what date you want to start at. Do you know what I'm saying?
Yes, no, I would agree. And maybe it's 3 months, maybe it's 6 months, right? Maybe it's 3 months of absolute pandemonium, for lack of a better word, right? And then 3 months for things to kind of reverberate back to the mean of normal life in society after things kind of calm down. And hopefully the pain is not too great in terms of, just human pain, and human loss is not too great during that time.
No, totally. And as we're speaking, folks, this is going to fly. This market's going to go up. So what just happened, we were just talking about gold is just up $16. It's down $350 right now. They're hitting the stock. This is going to be a sweet little reversal here. The bonds, they just the 10's still up 1 point, but that's going to pull back. This is going to be interesting watching this day shake out, man. I think this is going to be a total reversal. And I'm talking on a short-term basis, folks. This is the first test of the lows. So what normally happens in a market like this, we look at the S&P. This is what normally would happen. You get the test of the lows, okay? You get a rejection of lower price. We get an explosion topside again. Okay, this market, I would by Monday or Tuesday, the SPY is going to be back up to the S&P will be back over 3150, somewhere like that. That's my take, and that's over the last high that was established on Tuesday. Okay, then what happens is this: when you're going to see the volume dies off again, you start building cars, and that's going to be 2 or 3 months or whatever, and you'll basically bounce around in that consolidation, whatever the top of the consolidation would be, wherever we make the bounce to. And then it will depend on how we're pushing into the highs versus the lows as to, okay, was that it? Because that certainly could be it, because it was so fast, because it just flushes everything out. And we'll find out as to how it's basically pushing against the highs versus the lows, to see how this shakes out. So it's going to be wild watching it. You can really learn a lot in these markets, folks, because you can't teach this. You have to have been through these markets. If I've found out anything, you really got to be through them, because the differential is really sticking with, are there buyers or sellers? It's supply and demand. That's all it is. You know what I mean?
Yes.
And when you're at lows, you think you can go a lot lower. Well, you only can go so low as people have sold. And as that contracts, guess what? Bang, you can go up in about a heartbeat. So pretty wild. Let's go over to that gold contract. I got to look. They just.
We're getting a pop, man. Gold was up the 1690, I believe, was the high. So it's saying it's flat, but yeah, it was dramatically higher.
Yeah, this is how gold trades, folks. Okay, it's not even. It's like typical. So gold, let's see, 1624. Oh my God, 1624. I can get down to 1624. Weird. 1640. We're at 1667. That'll put the fear of God in folks again. Okay, it's just crazy, right? Is it? We're so lucky we're in the markets, Tom. I mean, all of us, because folks, you never stop learning in the markets. That's what's so cool about it. The silver. Let's go take a look at silver. They'll kill silver, man. Aside, yeah. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow Industrials right now down 560. Nasdaq's up 187. S&Ps are up 64. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is down 425, Nasdaq's up 148, S&Ps are up 49. So let's, we started with that Google, and you're going to see, folks, Google rejected lower price, man. $12.94 we're at, and I think we're looking for that, $12.71. Yeah, $12.71. And, of course, you got reversals everywhere out here. Pretty wild.
Yeah, I mean, this market, man, you better talk quick because it's moving fast. Dow's only down 379. Some of the stocks I saw catching a bit even early. I was looking at Amazon. Amazon's down only about 0.7% now. Yep. You still have the market down about 1.5%, right? So Amazon back above 1,900. Microsoft and Facebook, a little bit of different story when you have Microsoft in the news that they actually have employees that are getting it. So they're down about 2.6%. Facebook down 1.8%, pretty much in line with the market. Netflix shares, though, down only 0.8%. They've held up relatively well, as we've been talking about.
Yes.
And Disney shares, interesting, actually flat now for the day. After being down to 110.32, up more than $3.50. One thing I was looking at Disney, we've been talking about it a while. I'm definitely a long-term bull in Disney with their streaming service, man. We're now going back, putting this on even a 10-year monthly. We are back in a price of Disney to a world of June of 2015. You're talking about 5 years in Disney. You could have owned that stock and you're breaking even. One thing for context, I started to say, where did they buy all of these they bought Star Wars, right? I believe that was in 2012. I had to look it up. Okay, yeah. So they bought Star Wars and they started earning a profit almost instantly on that franchise. They bought Marvel back in 2009. So you see the run up, right? From like $40, they were down at $28 in 2011. You have that run up to basically a straight shot up to $120. Now they just closed the deal with Fox kind of in 2019. And to put things, though, this is where it gets interesting, man. I mean, Disney Parks, just a mammoth, man. I don't know who's going to be going to movie theaters anytime soon, right? All this stuff going on. So they're going to get hit hard. But you go back to a world where we had no idea what Disney Plus, that streaming service, was going to be about. And you could argue that that's going to be the future of a company like Disney, man. Producing their content, delivering it to consumers. They have Disney, they have Hulu, they have ESPN, packaging that deal to consumers, competing with Netflix. You're back now under the price level. We didn't even know this gap away almost a year ago now. In April of 19 is when they told the world that they were going to undercut the price of Netflix. They were going to offer it for like $6. They were going to package it in a deal for $13 or $14 with Hulu and ESPN. The market loved it. You go from $115 up to $140 in a matter of 2 weeks. We hover around there. They launched the service in November. They tell the world they have 10 million subscribers in November 13th. You're back to a high basically of 150. You come out with their numbers. It seems so far away now, man. A month ago in February, they tell people that they have 26.5 million subscribers, and now you're back to a price before the market knew any of that, right? How does that make sense?
Well, that's what's so cool about so as you dissected that, Tom, and this is really cool, folks, okay? So let's picture that you're running portfolios, you have portfolios. I mean, that is exactly what you want to do because it's always so hard to buy something when you've been down so dramatically, okay? But when you look at that analysis was perfect because the reality is that, guess what? It's not going to be there forever, folks, okay?
No.
Now, the other side of this gets to the point about when do you sell something? Because just like you said, you're back 5 years, they pay 1.5% dividend. So that's when you got to make sure you know that when things are up, folks, you got to know what you are doing yourself in the next couple years. Do you know what I'm saying? So
definitely. Definitely. If you're at 153, not to jump in, but you make it, and you planned on being out in the next year or two of Disney, well, geez, they're going to spend a lot of money in the next year or two on all this content, let alone the coronavirus, right? They're going to spend a lot of money. Right. They're not going to be making money. They've already told the world that they're going to be losing money to sign people up. So the next year or two, maybe even 3, not sure how the market's going to price that in because guess what? They might miss on earnings some quarters. They're spending more money than they want on programming. I mean, just Netflix spend, what's it, $18 billion a year Netflix is spending on content.
Right.
But in the long run, man, you got 26 million people signed up in the first quarter. And it's Disney, right? There's no other content provider like Disney, man. Kids, families, not to mention they package it with ESPN. So you got Disney for the kids, you got ESPN for the men in the house, the guys, the you know, stereotypical, but that's, and then you have Hulu for everything else. That's a nice combo in between. It's just remarkable that you're back to a world where we didn't even know what the price tag was going to be on that, let alone that they would undercut them, let alone they'd launch it. It would go well, 10 million people, and after the first quarter, I mean, the numbers they initially put out, we'll have to get them up, because they were nothing near what they're talking about in terms of delivering. I think they said maybe they'd get, you know, 40 million over the first few years or something like that, right? And they have 26 million in the first 3 months. So
it's a monster.
It is.
So let's look at this. This is going to get interesting, folks. So you got the S&P right now down 65. So what just happened literally 5 minutes ago is Larry Kudlow just went on at CNBC and told people they shouldn't get near Seattle, okay? So that's what this, I suspect this S&P is going to just blow this away. But these, it's really going to be intriguing. Now, that's, I suspect that, I'm not quite sure that the people in Seattle, the mayor is happy about that, sad about that, whatever it is. But that's what you just saw in the S&Ps for a second. But the S&Ps are going to just blow that off. But that would be the first in the United States, you know what I'm saying, that they're saying, okay, stay away from that city. But now that's Kudlow. That's not, you know, so I'm bringing it up, folks, just so you can see what tends to happen in a market that it really, if it does want to bounce, it doesn't matter what other news comes out. So you take a market from taking every bit of news saying it's bad to taking, you know, what Kudlow just said, and then the market all of a sudden says, you know what, we've already priced that in, you know. So we'll find out how this shakes out, but I'm telling you, man, it's like the whole thing is just wild, man. And the poor people in Seattle, there's no doubt that outbreak in Seattle is, I mean, and that's, I believe that it started with that cruise ship, right? I think that's how it started.
You know, I'm not sure to speak to it, but the cruise ships, man, that's I mean, it seems like, you know, I don't know who's going on a cruise anytime soon, man, because you can catch it anywhere. But guess what? Here's the problem, folks, is that, you know, if somebody, let's just say you go to Disney, right, which I think is going to be more and more risky. And I'm a long-term bill on Disney, but who's going to be showing up to Disney in a few weeks? As, you know, we already have cases in Hillsborough County in Tampa, where I live. But somebody gets it at Disney, they don't have you on lockdown for 3 weeks. If somebody anywhere near you on that cruise ship happens to have it, whether you have it or not, you're now confined for a period of 2 to 3 weeks on that cruise ship. And guess what? Your odds of getting it seems, because they haven't handled them too well at all, go up from there as well, which is just, I don't know why you'd be doing that. And those cruise companies, you're seeing the hit they're taking appropriately, I'd say.
Yeah, there's no doubt, man. And, you know,
that's one, man. You want a long-term horizon, you better have a very long-term horizon for those cruise companies if you're going to be a buyer there, because that stigma that they're dealing with right now, man, they already have kind of a little bit of a stigma, right, of not being dirty, germs, right, buffets, all that stuff. It's going to stick for a while, man.
And what happens, it's older people that basically, you know, cruise a lot, and this is a virus that is hitting older people much.
Great point.
Heavily. Yeah,
definitely.
Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 366, Nasdaq's off 134, S&Ps are off 42. Action
everywhere, man. Hey, I said to you at the break, I do the morning market kickoff from 8:30 till 9. Now, I didn't see this because there was no move this morning. I had taken a look at some of these travel stocks, right?
Yep.
And I sent to you over the break, United Airlines, man, waits for the market open. We're now up 7.6%, and we started the day down in 48 range. We closed yesterday at 51. We're trading at 55, 52. All of these, maybe they're seeing kind of a max pain area because American up 5% after opening much lower as well. Even the cruise lines, Norwegian up 5.2%, and all of these on the open, which was remarkable that you saw no action overnight. It's just maybe interesting that we talked about it as well. You got to be such a long-term buyer, but maybe that news yesterday for Carnival, still up 4.5% in terms of their second cruise ship getting hit, kind of a max pain area because, you just got cut in half, 50% from January 17th to where we just traded at, literally to the penny, from $52 down to $26, cut in half. If you're on margin, you lost every single penny you had, which is crazy in the terms of a month on a company that before this, you could see as a pretty stable stable company with not too much risk. Not like you're buying a biotech or a company like, Snapchat or Twitter, man, predicated on the future. You're buying a cruise company with earnings, and you just got cut in half. But all of them popping today pretty dramatically. No,
there's no doubt. Now, watch this with the United folks. This is really cool. So I'm going to take United. And what United has done here, okay, is come back to its breakout area, and it looks like it's going to be lighter volume. So it's hard to, I can't gauge this quick enough on the air right now, but what you're going to see is that I'll show you just how the breakout area is, which is really cool, man. So picture this. You're going back to October of 2014.
Wild.
And you can see that the breakout area basically is $49 around there, just ballparking. We went down to 48, 48.20. Now, this is the sickest part, folks, okay? This is actually a normal pullback. It's so weird that when you get pullbacks, man, they like doing it like this, but, that's 6 years ago. But guess what? That very well could be it, man. I mean, I'd have to dissect this a little bit more on a weekly basis to see what that weekly one is, but that's what markets do, man. So that would take 4 months to give back 6 years. And, bottom line is that there's more people now, there's more everything, so.
Yeah, and I mean, United, man, we just went from $90 to 48. 45 would have been a 50% in the span of a month.
Right.
Yeah.
Monster move. And you can
Definitely
see what's happening. So let's go to the 10-year. I suspect what you're going to have here, folks, okay, the bottom line, this 10-year, we got the price to get all the way up to 138.15. And I suspect by the end of today here, this is going to be flat. Right now, we're up almost a full point. This is kind of the acceleration all the way up. That first sell down was pretty good. 137.13 it hit. We'll see how this shakes out, but I suspect it can give it back as this market keeps turning. So it's going to be a wild one. And I'm sure what does happen on markets like this too, folks, and this is where the bulls and the bears, everyone's still speculating, of course, what's going on out there. And if you were a bear like now, you'd be speculating that, this thing's going to pull back another 100, be down 100 S&P points. I explained to you, why I don't think that, okay? Because it just says supply and demand. It's like, where are the sellers, where are the buyers? It is what it is. Now, watch the other side of this, which is pretty cool, because what you're looking for, which we already got on the way up, what you're looking for, I'm going to put the S&P up on a 10-minute, and what you're looking for as you gain, you need volume as you're gaining, and that's exactly what we're getting on the way up. You can see what happened is that and this is what's cool, because the downdraft, folks, is overnight, you're not going to have volume. So it's real easy for this market to get to 29.93. And because there's nothing there. Do you know what I'm saying? That, you went down overnight, but the bottom line is, guess what? There wasn't a huge amount of sellers. Now you have buyers that are there, and there's really nothing. The battle is going to be at the, actually, the first battle is right, 29.71. That was the lows when we were at 2 o'clock in the morning. I suspect you're still going to blow through them because there's no volume, and then the battle line sets up somewhere at, let's see. Oh, that'd be weird if it can get a 3,002.
I was going to say maybe 3,000, right?
It's 3,000. That's what it is.
Yeah.
If we are flat today, folks, that is going to be insane. But it looks like it's going to be there. Now, what will happen if that's the case, too? Watch this. If that's the case, we very well might get a monster hammer on a weekly chart. Let me see how this is going to set up. So if I put this on a weekly. Oh, no, we wouldn't get a hammer. 1 second. Oh, yeah, we could. We could get a test, almost a test of the, let's see. No, the 313. No, we're not, there's no way. It's not going to go up to 313 today. We're not going to get a hammer. What you're going to get a doji on a weekly basis. But a doji also basically, can say that, okay, you might have a short-term bottom in. So, and you can see with gold, they're killing gold. Royal Gold's down $5.50 right now. You get the HUI down $7. Let's see, what are we at? Down $9.
Yeah, wild. We've dropped almost $40 in the price of gold since we were trading at just a couple hours ago.
Right. And if we go over to the dollar, what you're going to see in the dollar wants to make its way to 95, but this was just, the move was just a little bit too, well, actually, look at that. We made 95. Okay, hold on. Let's look at this then, because this is what's cool, too. The bottom of this, look at that. Oh, man, the dollar's going to go to 88. But 90, it's going to stop right there. 95,843. Approximately went to 95,712. So look at those bars, though. Those bars.
I was just looking at them, man. 2 weeks. I mean, epic weeks in the market everywhere. But geez, looking at them on that chart, the run we've had in the dollar, just gone, poof, just like that.
So 2 weeks just got you back to August of 2018. And the way the euro has been trading, folks, I suspect we're going to make it down to 88. So this is like I'd say this is we know we get a wave that has been down, but I think this is the first wave, and we'll see from there, how this shakes out. Because you very well could just have a monster consolidation, because the amount of the move down, man, the move up to down, we're talking about ride 'em cowboy in a huge way.
Yeah, and
you get your boots?
What's that?
Do you have your boots?
My boots?
Yeah.
For what?
For our horses. So we can
for
ride
our horses. Right, I'm out of here. The one thing I was going to say, just crazy in terms of the way the political field has changed so much, right? You saw the reaction on Wednesday after Super Tuesday, but a huge deal. I mean, the market was going to freak out if Bernie was the elected Democratic nominee. It looked to be that was the case a week ago. That seems to be a far cry now with Biden in the lead, and we still... that would have a much greater long-term impact, right?
For sure.
Much greater. That's been taken off the table, and still the market's struggling. So we'll see.
Stay right there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 368, NASDAQ off 140, S&P's off 45. And that looks like a lot, folks, but the market is just taking back about half, right?
Yeah, if not even more. Yeah, more than half.
And the Dow Industrials, more than half, for sure. So no doubt we are only at the beginning of the day out here, but I expect what you're going to see, folks, is that it's going to keep crawling back. What you do have is that it's unusual that you can do this on a Friday, but the way that even we put the S&P up, it's just this thing is just lined up pretty sweet, actually. Because
yeah, I mean, we just went up 70 S&P points from 915. That's 2.3%. We're up from 915. So remarkable.
Right. And, you know, this is the S&P chart, you're going to see that the futures had made a low of 28.53 on Monday. Well, the low today is 29.06. And, you know, they've rejected it already. Now, if you close over 29.96, it's really going to be a trip because then, you know, you got a doji at the bottom, first on Monday. Then today, if they could do it up there, then you're going to have a monster hammer. And the bigger that hammer is inside, you know, candlestick charting, folks, is saying that the larger that you could get the bounce. So we'll see where the whole baby shakes out. Now, let me just go quick over to Europe, because what has happened, I was worried about even that call this morning, because Europe, the DAX had broken, as did the FTSE. It actually broke the lows. So right now, the first low on Monday was 11,624. Yeah, you're still below it in the DAX. So see, this is a heads up in general that we got to watch ourselves in a huge way, folks, because the DAX broke it, as did the UK. But both of those were much weaker than our markets anyway. But that's a heads up, man. Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman. Ride that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.